Hello investors. It's been another good month for your portfolio. The market was mildly negative, but your portfolio was well positive. So it's been another month of consistent outperformance. Of course, months of underperformance and outperformance will continue. But really, what we look at and what we give importance to are the quarterly numbers of your portfolio. So for the June quarter ended, we've had numbers. And the good part is that most of our portfolio stocks have come out with splendid numbers. So I really want to share with you the report card of the fundamental performance of your portfolio. On your screen, you will see our top 10 holdings. And you will find multiple columns. The first two, which are on red, which is the quarterly sales growth and quarterly operating profit growth, gives you the numbers which are recent as to the numbers reported recently for the quarter ended June. Next to that, you will see numbers on a 3-year CAGR basis. So that gives you a sense of the longer term trend. The columns in the red give you a sense of the shorter term trend. But the good part is that you will notice that on all time frames, your portfolio stocks at an average have done much better than the broader market. The list of stocks is there: Apar, Varun, Tube Investments, Action Construction, Hindustan Aeronauticals, ICICI Bank, APL Apollo Tubes, Naveen Fluorine, KEI Industries, and Bharat Electricals. Of course, we have some others also, but these are your top 10 holdings. And at the bottom, you can see how the Nifty 50 stocks have done. Again, the Nifty 50 is a formidable opponent because these are the 50 best stocks. Your portfolio stocks have done, you can see, much better than even that. And that is really what reflects in the longer term in the market. Prices will follow earnings, and when the earnings delivered are impressive, sooner or later it will reflect in the portfolio. So as a quarterly update, we are very satisfied with the portfolio stocks. Yes, some stocks may not have delivered great stuff, and we are on top of the game. You know that as trend followers, we tend to be proactive, and as and when action is required, we will be taking it. In the next slide, you can see the themes we are investing in, and this gives you a sense of where we think earnings will follow, and sooner or later prices will catch up. So the themes that we are interested and invested in is our large overweight position is in electrical equipments. We've shared that with you earlier. And the reason is that you will realize that there is a lot of capex being done by Indian Railways and in the power sector by the government. And this is translating to a lot of our portfolio stocks. So we really have a good overweight position in electrical equipments. They are playing out very well, and we feel that going ahead, there is a longer runway available to us, a very satisfying sector theme that we are in. Second is FMCG foods. In FMCG also, we are not in the general mass market, normal FMCG soap and shampoo market. We really are more towards the food space, which I think are niche plays, and both our invested companies are leaders in these niche plays. And we feel that they will deliver superior profitability and growth going ahead. Metals, a kind of space which has been on the back foot in the last few months. But we feel that metals as a commodity and as an exposure in your portfolio is an interesting play, because for whatever it is that they have been corrective in the last few months, they are again showing strength. And metals, as we know, can move up very fast. They are a very fast sector. So we would like to be exposed to this sector because we feel that after the recent outperformance, there is a possibility of creating alpha in your portfolio. So we have an overexposure to metals also. Engineering, another sector linked to the capex cycle. We've shared this repeatedly and maybe for the last 6 months that we really like the domestic capex theme. the engineering theme, and all companies that are linked to it. It is showing in the numbers, and we continue to be very, very satisfied with the performance that is there. Defense, a lot in the news, a lot of order flows, and I think that there's a long runway. As long as these companies are able to execute well, we feel that this also can be a sector which has a very long runway, a lot of promise, and a lot happening from the government side. Auto and ancillary stocks, we actually like the electrical space. We feel that electrical mobility is catching up very fast globally, and in India we are still at a nascent stage, but we feel that with the world putting so much emphasis on conserving the environment, electric mobility is going to be a big play. So we are playing this with a good overweight position in auto ancillaries, and as I repeat, the electrical facing side. Banks are something which we are actually underweight in, and this is very, very different from the thought process in the market. But as you know that we are objective, and there may be consensus that we should be overweight, the world is overweight in them. We actually are a bit underweight. In fact, we prefer some financials rather than some of the banks. And to some extent, the market has been also proving us right. Another sector where we are upping our exposure and which has been through a slump in the last few years, especially post-COVID, is the pharma space. We feel that the pricing pressure that these companies were witnessing in the US is getting released, and we feel that the numbers that have come out in the pharma companies have been very impressive. So we have in fact increased our exposure to pharma. So broadly, these are the 8 themes that we are invested in. We do feel that barring the monthly ups and downs and the flows and outflows, but this is something which will deliver in the months and years to come, and that is why we have an overweight position here. As far as the market goes, we've had a good few months of an up move, and it's very natural for markets after such a big up move to correct. Corrections can be 2 types, price wise or time wise. And I'm happy to say that I feel that Indian markets are going through a time-wise correction. As I said, the last month has been mildly negative. But even in this negative month, you will find that a lot of your portfolio stocks have made new highs. So the markets after a big up move can go sideways, which is what we think is playing out. And the next leg should take us much higher, well beyond the 20,000, which is the big number that is our challenge right now. I still continue to hold a very bullish bias to the market. I still continue to feel that this is still a good time to invest in case you have missed the rally or left out. With that optimistic note, I leave you again for this one. Thank you very much.